Hello, Warriors. Good day. Welcome to FACE. How's everyone doing? Everyone doing all right? I want to start off with Canada here.
The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody. How are my trading warrior brothers and sisters doing today? I see Tosin. How are you, Tosin? Who else is in the house that I recognize? Where's my crew? Hello, Patrick, Matthew, Jack. How's it going? Kevin, how are you? Hello, Paul. Okay, I wanted to start off with the Canadian here today. I'm doing fine. In fact, I'm as brilliant as a diamond, buddy. You better put on your shades. So last week, before I started here, yes.
Dale, hey, good morning. It's Blake. Hey, I just want to let you know I cannot see your screen right now. I'll let you know when I can. There, I can. Okay.
Okay, thank you, Blake.
You're welcome.
Last week we were talking about potential shorts in the Canadian, and we were looking for one more rally to clean out shorts. So this is the advantage that I have and subscribers have. So we had this real strong rally here. I wasn't sure if this would negate it. I drew this little uptrend line, thought we might get a back test of it. But what do I do if I'm not sure about the Canadian here? What I do is I go to the ForexAnalytix page, right? And I could scroll down all the different pairs I like, and there was an update by Grega on USD CAD. Okay, so he's showing this as a 2, even though we got up to 4.5. Everyone who had their stops over here, they were taken out. All right, so I think that there is a good shorting opportunity. Grega and everyone else on the team, they show their invalidation levels. That's your risk on the trade. Okay, so it's going to be above 135.33. Everyone see that that's an advantage that I didn't have, and I can get it outside of room hours. And if this wasn't really the only thing I wanted to look at, the only methodology, I can always go to Canada and look at all the different views on Canada, right, by just clicking on USD CAD, okay? I could get the macro view. This is written by Stelios. He does the macro stuff. I could get the basic technical. I could get that from Blake. I could get the harmonics work from Blake. So I just wanted to show you what a great resource it is. And here's the macro on CAD. US CAD been on a 2-year bull market on the back of falling oil prices and the Fed's perceived tightening path, taking the pair roughly to 145. Then as oil staged a turnaround, Canada got killed. This was, according to most people, an impulsive move, and all we've been having in here is corrective action, at least so far. So there's still a possibility for lower numbers. For a swing trade, I think there's a shot at Grega's number right around 130, 120. And give me a Y if you see it and see the advantage. Hardianto, I think you were looking for that as well. How are you, buddy? Alexandros, congratulations on your call on the oil. We got that 1.5-day pullback. You were the only chart that I showed. Okay, so there's Canada. I think there is an opportunity here in Canada, and that means that the crude rally could continue to extend. Oh, thank you, Sarek. How are you? I'm glad you joined us. So, Sarek, you've been around with me for a while, going all the way back to the FX Street days. This is the strongest combination community plus great traders on the ForexAnalytix team at your fingertips. And if I get an alert today, I'm going to go right to the alert so that we could look at it. So isn't it a great advantage to be able, if you have your own idea, like we had an idea about what to do with Canada, and it's 3 o'clock in the afternoon, and the room is closed, and we can't collaborate with everyone. All we have to do is go to the ForexAnalytix site. Okay, Alexander, let's kill it. All right, so what to do now? This was not an easy sale up here. Perhaps you finesse some type of recovery back towards the back test here. If we get a rally back towards 430 and put in a second lower high, that could be a great entry point for Canada. The special surprise we have today is Nicola Duke. Nick is going to be with us, share her harmonic work so everyone could get in harmony with what's going on in the markets. Euro's still trying to hold this 3 drive to a bottom formation. Still think there's an opportunity for it to come out of here, maybe rally up towards this 200 moving at 107.40. My personal style is I'm flat for the NFP. I'm going to be opening the room early for the NFP. It'll be at 8:25 Eastern time on Fridays so that people that don't trade through the number can be here to react to the reaction. Is that a deal? You guys want me to open early for the NFP number? Give me a Y if you do. Some people it doesn't make any difference. A lot of people love that. Hi Dan, how are you? Okay, good. We'll do it. Hi Jess, how are you? Midas, how are you? So why don't we try this? I see some of the old timers that have been around with me for a while are here in the room. I'd like to try and share some of your work today before Nick gets here. And we could look at your work and then go to the FOMC. And then we could go to the FA website and take a look at how it comps with some of the looks that you guys are going to provide. So go ahead. I think I know how to do it now. Steve Volge worked with me on how to show your charts. If you want to just place your links here, we could take a few looks and get the community involved. There will be days like yesterday when Blake's here and Steve's here, and we have an interview here where it's more of you're a spectator. Yeah, you could place a snapshot, Jack. Any kind of, or a link. Hello, Luis. Nice to meet you, Oscar. Yeah, I think a lot of people, I don't think that you can use the chat box, although Nicola did, but she may be an organizer. So here you go. We have a new update for gold, and what a great call! ForexAnalytix made in the gold yesterday. Before I go to the update, I just want to show you guys. They put out a very low risk short entry yesterday from up around this 1260 level. Looks like it's rolling over. So here you go. So you see these alerts that I get in the right hand corner, and you hear the clicking sound when I get them. Give me a Y if you see them or hear them on the right hand corner of my screen. Yeah, you learn listening. I agree with you. Okay, so after you get the alert, you just go to the website, and it's going to be in your FA live stream, and then you just click new update for XAU, and this is basic technical. This is the work that Blake and Steve Volge do. So here's your chart. The short entry was from yesterday at major resistance. As you recall, all week, Blake is expecting eventually a breakout over this area, but price is more important than opinions, right, Blake? And had the wherewithal to say, well, you know what? If there is going to be a correction in gold, what a great spot to sell it, because I know I'm wrong within about $10 of the move. We're going to have a major breakout over the 200-day and over this triple top that it's starting to look like now. Yeah, you get 60 alerts per day. I know sometimes you get you can get a bit overwhelmed. So that's just part of it, looking at the most recent chart, right?
Dale, if I can interrupt for a second, just to remind users of ForexAnalytix, they can fully customize what kind of events they want to receive, either at their mobiles, emails, or through browser notifications. It's fully customizable from the settings, general settings and notifications. Okay, and they can even customize for which tickers they want to receive which kind of notifications. So they get the exact amount of information they wished. Thank you.
There you go. If you're overwhelmed, Dan, you could customize it, drop out the ticker symbols you don't want any alerts on. And you know what else you could do, guys? Here's a real nice feature. In fact, this is where I met Blake. This is where I met Nick. This is where I met Steve. This is where I followed Grega. You can customize your own Twitter feed. All right, so you don't have to go to your tweet deck. You could have everything here on this platform that you need, so you don't have to be switching pages. You know, you're here, you're looking at research, and you're still getting all the Twitter feeds, all the handles you want to follow. You can customize it. Are you guys aware of it? Who's using their own customized Twitter feed in here? Anyone? Has anyone done it? Hello, Abel. How are you? You getting dizzy following me around everywhere? Eric uses it. It's nice, isn't it, Eric? Okay. So again, there's an example of Canada, but again, as a subscriber, if you have this on and you know you have phone apps now, you're going to get all these alerts in the ForexAnalytix live stream. This is all breaking higher. All right, this is all chronological. The first one you see is the most recent. You could scroll down. I don't know if there are many copper traders in here, but you had some new updates. I know Ricardo Dinger owns the Mexican peso, but we also cover the peso. It's a wild one. I know Blake likes to take it. So you have your updates through the stream here. If there's nothing you see in the stream, you could go to any one of the pairs, and then you get all the different kinds. There's macro, candlestick. I know there's a lot of candlesticks traders in here.
Hey, Dale.
Yeah.
Hey, speaking of which, when you get a chance, let me. I want to speak about the peso when you have an opportunity.
I go ahead.
Okay.
Go ahead. I'm just warning you that Ricardo Dinger in my last room says in my peso. So he owns the peso, and if you want to trade it, you have to get his permission.
Okay.
Go ahead, buddy.
Yeah, let me go ahead and show the. I want to show the peso. I'll get over to that here in a second. I'm trading it to the long side. It's been a little frustrating, but I want to show you guys why I'm doing it. This is the descending wedge, and you can see it's a big one too. This is and for those of you that don't know who I am, this is Blake Morrow. You can see the extreme.
Only Blake, only one person so far that I know didn't know who you were, because I noticed you thanked Peter for his interview yesterday.
Yeah.
And he just said thank you for attending.
Yeah. It's actually the first time I ever heard of him, but it was good to hear him. That's good. But he trades equities mostly, you know.
That's what I mean. He's not from the FX world, so that's why he didn't know you. Don't feel bad, buddy.
Oh, didn't even think about it. But the peso came out of this descending wedge yesterday, and you can see how it popped through some stops. So when we rallied through this this trend line, cleared a bunch of stops out, and what we've been doing is back testing this trend line the whole time. And you can see if you just take a 1 hour chart. It's pulled back to the 618. The problem with the peso right now is the peso is driven by risk aversion and risk appetite on top of other things too. So one of the bigger issues right now is the stock market continues to go higher. So if the stock market continues to go higher, emerging market currencies tend to outperform. So in this example, you can see that, you know, the peso, after squeezing some people out, has just, you know, been driven lower. Now, as long as equities stay pretty well bid, this won't go anywhere, in my opinion. I also feel that the U.S. equity markets are probably somewhere near a high, not necessarily today or tomorrow, but somewhere in this vicinity. So that's why I also don't mind playing it on the, excuse me, on the long side. We are at the 618 right now. I'm a little hesitant to be adding here. I've already got a position, and what I'd like to see happen before I start getting more aggressive on the long side is I'd like to see us, well, actually, let me stop there. Dale, what is the definition of a trend? Uptrend or downtrend? The true definition.
The true definition, an uptrend is consistently moving from left to right, making higher lows and higher highs, and the inverse for downtrends.
Exactly. Okay. So what you just pointed out is we are in a downtrend,
Right.
and you can see just by what I drew here that we have a downtrend that's still, even though we're trying to, you know, form some sort of rounded bottom, descending wedge, we're still putting in lower highs. I can continue to draw out these circles if I wanted to. You know, I can just keep drawing them here, and there. So we're still making lower highs. So until we start making a series of higher highs, I'm not fully convinced that we've reversed. I am trading it to the long side, and if you look at the daily chart, we are diverging really bad. What I mean by that, and Dale, since you're new to this software, this Citrix software, I want to show you a little trick, and you may not know this. When you're looking at your admin panel, there is a little pencil, and you can grab a pen, highlighter, spotlight. I'm going to do a highlighter at this point. You can see what I'm going to do here. You'll notice that we've been driving lower, but you notice that relative strength hasn't been going lower. It's stopped going lower around these levels. So, and then you can right click and erase them. You know,
yeah, the last confirmed low was prior to March.
Right. So the low over here was really the low over here. So even though we've been moving lower in price, relative strength has not. Okay. Yeah. So that is one of those keys that I'll look for a divergent relative strength that in turn is telling us that we're going to try to turn higher. It doesn't guarantee that we're going to. It's just one of the several tools that I'll use when I'm looking at a technical picture. You know, I obviously will factor in more than just technicals. I look at, you know, the fundamental backdrop. Why is a currency moving higher and lower? We just had Mexican consumer confidence. That number came in stronger than expected, and that happened just 18 minutes ago. And the peso actually is going down right now, not going up. So that's, you know, there's things that I'm looking at that are factoring into my decision making. It's not just technical. If you guys are only technical traders, I'm going to tell you, go jump in a car, maybe a V8 something with about 400 horsepower. Okay. And for those of you that live in Europe, you might have to drive a 6-cylinder or something.
Careful now.
That's tuned differently, like a little Japanese car, Nick, but that has a lot of horsepower. Then go ahead and take your right hand that you would normally shift, you know, with your stick shift. Take your hand off the stick shift, put it over your right eye, and then go drive 100 miles an hour or 150 kilometers an hour down the road and try driving around for a while. That's what happens when you just trade technicals. Okay, so I don't rely just on technicals. I rely on a lot of different things. Okay, there's, you know, I always tell people this, Dale. I can teach a monkey how to look at charts and read them correctly. Okay. There's so much more into trading than just charts. You have to take the fundamental backdrop, positioning, you have to take sentiment, and then put it all together, cross correlations, and then also add on top of that, cross rate movements, and then you might get a semi-fluid picture of what's going on. So, because I had Fazai said, hey, well, an RSI can stay divergent for a long time. Well, hell yeah, it can. I mean, look, we've had a divergent RSI since the beginning of March or the end of February. It's the beginning of April. It's been a month and a half. So if you're just dependent on technicals, you're going to get you're driving around with one eye closed, and you're going to end up getting into some accidents. So
the S&P weekly, Blake, diverged for over 3 years until the recent blow off.
Yeah. I mean, so
years.
So when I show you technical stuff, that's what only makes part of the picture, and that's why like on ForexAnalytix, one of the important features of why we built the product the way that we did is that you're getting several different viewpoints technically, and a macro backdrop, and other things too, and you're seeing all different asset classes, not just currencies. So there's so much that goes into factoring decision making and what I'm doing in particular, and that doesn't guarantee results either. It never does. But if you can stack the probabilities in your favor, that's what's most important. If I have a 70-30 chance of making money in that trade, that doesn't guarantee I'm going to make the trade or I'm going to make money in that trade, but at least I'm put those probabilities in my favor. And that's all we can do as traders. You put as many probabilities in your favor as possible, and then you manage risk appropriately. And that's why whenever I trade, like I'll just look at the peso. Can anybody look at the chart that you're seeing in front of your screen and identify where my stop is? I mean, if you're looking at just, would you say it's safe?
I know where most people would put it.
Yeah, well, if I've been buying down here,
right here,
that my stop is down here, right? Well, if I'm looking to make money up here and I'm entering right here, that means I have a risk reward ratio of 1 to 3 maybe. Then that's the only thing that I can do is identify the probabilities, put as many in my favor, identify stops, know where my stop is at, and then hey, if I get stopped out, I get stopped out. But at least I give myself those chances to make money by giving more upside than to my downside.
I'd say the grand prize stop losses award would be under the November low. Anyone who's, you know what I mean? That was the election day, I believe. Yeah. So anyone who has a bullish bias, that's what they're hoping that election low holds.
Yeah, and realistically, this is where if you're thinking about like a risk reward basis. I mean, you have a trend. We still have higher lows. Okay.
Right.
So we're still theoretically in an uptrend, even though we broke through this channel. So anyway, I wanted to point out how I'm trading the peso. Hopefully, you guys got a few nuggets of information here. But more importantly, it's maybe a little bit of a lesson on what we use to factor in our decision making when we get in the markets. It's not for me. It's not just the charts. If it was just the charts and I traded just the charts, I would feel that I'm trading with one eye closed the whole time. Anyway, hey, I just wanted to talk a little bit about the peso.
Well, I have one question for you, like on the correlations. I've gotten in trouble sometimes when a correlation works for such a long time and then a disconnect occurs. How do you handle, like U.S. dollar yen going down is usually constructive for gold and constructive for bonds, and I've seen these correlations end up delinking at times.
Absolutely, they do, and I'm glad that you brought it up. I trade correlations, but what I like to trade more than correlations is I like to trade the divergence of a correlation or a breakdown of a correlation. So for example, If you guys follow like the S&P and the dollar yen, I could throw up gold here too, but I'm not going to. I don't want to take up too much of your time nor Nick's time. I just want to throw this all out there. Okay. You know, long term for the S&P and for the dollar yen, these correlations are really strong, and they tend to be really strong, and they break from time to time because of the yield differential between the yen and most other currencies. And even when, you know, every other central bank goes to normalize, which I'm assuming that they are on path of doing that now, it's going to leave probably the BOJ again with one of the currencies that have the lowest interest rate in all G10, maybe even more than that. So what that's going to carry is more of a carry trade type of feel with the yen moving forward. We've seen the stock market continue to go up, and that's this candlestick right here. We've seen the S&P go higher and the yen de-link away from it. But that's good. I don't mind that, because my 2 cents has been, and it continues to be, when the S&P does finally come under pressure, which you know, we'll probably see at some point here relatively soon, when the S&P comes under pressure, probably selling may go away type of, you know, seasonal, you know, over the next month. So when that happens, I do expect then the correlation to take hold again and the dollar yen to drive lower. So I like this divergence, because the dollar yen is already weak in the face of this move higher in equities. So if equities start to move lower, I do expect the dollar yen probably to trade down to like 105 or something. And that's a realistic expectation, and that's how I feel that I'll be trading the yen pairs back to the downside. And the other thing is, you take sentiment and you take positioning. There are so many funds that are short yen, long everything else. You know, whether it's
the carry trade.
Yeah, and everybody's short yen. They expect that, you know, Japan's gonna, you know, fall off the face of the earth somehow, and their demographics are gonna, you know, that there's gonna, you know, be cattywampus or whatever. You can.
It's the Fukushima trade.
There's 1,000 different arguments on why the yen's gonna go lower, but the fact of the matter is, if the S&P does start to roll over, or, you know, broad market risk starts to roll over, I think the yen's going to pick up steam again. And that's why, like, even, you know, some of the traders that I trade with in the fund, the small private fund that we manage, you know, they're like, hey Blake, you know, are you thinking about, you know, buying the euro yen or buying the pound yen? And I'm like, no, I only trade those to the short side. I'm only playing the yen to the long side. That doesn't mean they're going to go down all the time. It just means that my bias is going to be short. And, you know, especially while the dollar yen is trading below this 111.60, you know, if they pop back up to resistance, that's when I'm a seller. So I use that bias to trade directionally, because nothing goes up or down in a straight line, and it never does, and it never will. But I trade with a bias. So if I'm, like, for right now, I'm dollar bearish, generally speaking. So the dollar rallies that I find, like the ones today, I sell into. The dollar Swiss popped up right here to 1.0046. I shorted it earlier, and I covered it just about 20 minutes ago at 1.0027. And so I'll trade in that directional bias because of how I feel from a more of a macro standpoint. Okay.
So your telescope is your bias, and
yes.
and your microscope, you trade your telescopic bias. You won't trade counter to your macro bias.
Not necessarily. And I can't say I never do. I try not to. So, you know, if I'm, you know, I mean, a lot of them are event specific. Like, you know, if today we had a strong ADP number, okay, well, maybe I will play the dollar on the long side today. No, I'm not doing that right at the moment. But I will, and it's not like I, you know, it's not like I have a set rules that I follow all the time. There are certain ones that I'll bend, but I'll know if I'm breaking a rule, or if I'm doing something that I normally wouldn't do, my positioning might be a little bit smaller than like, instead of trading 10 lots, I might only trade 5 or something like that. You know, I just tend to pare down my position size. So anyway, that's enough. I just wanted to chime in about the peso. That was a great question about the yen. I know you're going to bring Nick on. I know you probably got a break, so I'm going to pass it back over to you, Dale. And I want to thank everybody for being here and supporting our community. This being with the Wise Trade Group for so many years, one thing that I realized that we built in my 15 years with that company, we built a great community, and that's one thing that ForexAnalytix, I'm hoping that we can build here is a great trading community where we're all sharing ideas. You guys got, you guys are going to have different ideas, different time frames, different platforms that you use, but if we can all feed off of each other and multiple eyes, whether hundreds and hundreds of eyes are much better than your two that you've got. Having that extra viewpoint and that extra the extra viewpoint and the extra set of eyes, or multiple hundreds of sets of eyes is really important to me as a trader, and it's been important to my success as a trader. So glad to have you all here. Dale, I'm going to pass it back over to you, and thanks guys for listening in. And you guys have I know you're going to have a great session today with Nick, and that's it. That's it for me.
Thank you, Blake. Everyone thank Blake.
Thanks,
Everyone thank Blake for that presentation.
Thanks, Blake. That was really good.
Yeah,
thanks.
Thank you, Blake.
Hey, good morning, guys. Thank you.
Okay, so we have that gold notification here. Just wanted to see if Canada. It's almost time for me to take a quick 5-minute break, and then we're going to spend some time sharing charts. So what I'd like you to do is put together a chart, look to sell this rally in Canada. I believe it's a trade, and show your chart. I know I teach not to trade the NFP, but I teach to preach to people to prepare their levels and scenarios and biases for after the NFP, so that you're not trading on the fly. They're not impulse trades, that you have all your areas lined up so that after the number, if you have an opportunity for it come to a sell zone or a buy zone for you, or you're looking for it to clean out stops before an entry, that you're prepared to react to the reaction. So why don't we do that? We do that after this quick break, and during the break, I just want to show you guys a nice little video that Steve Olge put together that is a video tutorial of how to use the platform, and I'll be back in 5. So I must not have been sharing my screen. You want to see it again?
We can see you now, Dale.
Okay. And you couldn't see the video?
No. I could see the video perfectly fine.
Okay. Someone's saying that Clayton said he couldn't see it. Give me a Y if you guys saw the video. Okay. Most did. Hi, BW. Thanks for following me around everywhere. Hi, Rick. Was it okay that Blake showed your peso today? Okay. All right, great. So why don't we take this time now? Looks like we're going to get this pop in Canada. Why don't we try and share a few looks now and get you guys involved? In fact, if you think you're a technical ace, show your charts and face. So any looks you guys want to provide, I'm going to try and show them right now, and then Nick will be with us in a little over 20 minutes. So now it's time not to isolate, but to collaborate. Okay, hold on. Here's our first look of the day. that wasn't it. That didn't work. Let me try it again. I'll get it. Steve said I could just double click it. That didn't work, so let me scroll it. Here we go. Okay, here's the Mexican peso. This was from Jess. Okay, Midas is showing it, showing a major trend line here. So Blake showed it underneath the trend line. Also, something that Midas does, and I know a lot of people like this type of analysis. Midas does supply-demand work. So these purple lines right here are his demand zones. We've hit one of the demand zones. Above it, I believe, is your supply zone, right? This your supply zone above it? Or did we just work through different supply, demand zones? But we're right at a demand zone. We have confluence with an uptrend line as well as a demand zone by Jess. You can't see the screen?
Your screen is showing just fine, Dale.
Okay.
I mean, they have to check their system. If they cannot see the screen, it's definitely not your issue.
All right, Forex. Okay, thank you, Steve. Okay, so that's one look from Jess. Here's another one from Jess. Jess, I've known for how many years have we known each other, Jess? 10? So this is what you could do. This is what you could do to share your work. It helps us out. This is a collaboration aspect of FACE. There are many great traders that have followed me around for years. And I've learned a lot from everybody. You can learn, it's the same chart. Okay. Same chart from Jess. What else do we have? We have something from Diego. Diego does a lot of harmonic work. Let's see what Diego has now. So see, guys, I'm getting used to the room, and now I know how to show your screenshots, which I wasn't able to do Monday. Okay, we could do that, Nick. So here's a look from Cyric. What are we looking at here, Cyric?
The cable.
Okay. Okay, so you're looking for downside here. I looked on the FX Analytics site, and Nick has support levels down here, so I'm going to ask Nick about cable too. Everyone thank Cyric for this look. Thank you, Cyric. Diego. Thank you, Diego. Thank you, Jess. Nice look, guys. So that's it. That's the fifth wave in 4. Okay. Any other shares? Is that it just from Diego and Jess? Okay, thank you, guys. Thank you, Diego. Any looks on Canada. Anyone agree that there's a shorting opportunity coming up here? Anyway, this is how we're going to collaborate. And I really do recommend that everyone does it. Okay, I'll take a look at the guppy for you, because it's going to make you more accountable. You're going to show your best work. It's going to make you a better trader. Anyone agree with me that started sharing their charts during my webinars over the years that it's made them a better trader because they pay more attention to what they're showing? Dan thinks so. So stretch yourself. No one is ever going to blame you if your scenario does not play out. It's a great learning experience for you. Who knows, one day you may want to mentor people. Well, this is what leads to live trades. I'm a big believer in intelligence gathering. There's Luca. Luca's been waiting patiently to do something on the euro yen. All right, hold on. He's giving you numbers. Luca's a great trader. In fact, you know, what Luca told me was that he learned a lot from Blake. I'm sure like most of you people have. I asked him who taught him or where did he learn how to trade, and Blake was one of his sources. So here's a look from Luca. He's been patiently waiting for this pullback. So we have it on a moving average here, Luca, on an uptrend line, and we're finally getting a positive candle. I think you're looking for a rally back to resistance. Is that true? And he gives you all the parameters here. As long as 1775, he's now got to be stopped looking for 21. So some type of retracement from here.
I love that chart of yours, Luca. I completely agree with that.
Okay, see what I mean, Nick? There's some great eyeballs out here that have followed me around for years. I can't get rid of them.
If I may add, Dale, if we close above, let me see, roughly 118.50, we will also have some kind of a morning star formation on the daily.
Okay.
With a hammer instead of a doji, but you know, a morning and evening stars, you know, can have multiple varieties of candles as the middle candle. The common
great input, Steve.
Yeah.
All right. So you know, and Steve does the candlestick work here, so he knows what every candle means. When I was first exposed to candlesticks, it was Steve Neeson who made it popular here in America. Is that where you learned from, Steve Neeson? Steve?
He's the man.
Oh, yeah, among others, yes.
He's the man? He's the candlestick man. All right. So we have a couple other looks. One from Vamsi. It's Aussie CAD. Let's take a look at that. Do you guys like this chart sharing from the community? Give me a Y if you do. I think it's a great part of being a community instead of just sitting there and always only standing up and sitting down when Blake or Nick or Grega or Dale Pinkert, that charlatan, has an example of a trade for you to do. We're getting all kinds of great looks here today. Let's see if this link is not working for me on the Aussie CAD. Let me move on. Because I know, and Rick's got some looks here. Okay, so Aussie yen has gotten to a target. Here's Hardian. This is Hardianto here. And we're getting an alert from ForexAnalytix right now. Guppy is just breached the first resistance level. Anyone long Guppy?
Dale, I just put the link again. This link should work for our friend that sent an Audi card.
Okay. Something with that link did not work for me, Hardianto. I don't know why. Should have the whole thing here, right? We do it this way. And I'll get faster as time goes on. Okay, so this is what we were talking about last week with Hardianto. Hardianto does some wave work. He actually called the high, was looking for 34.5 here in Canada 2B, and he's looking for a little bit lower than Grega. Nice look, Hardianto. Thank you, Hardianto. Everyone thank our contributors. A lot of our contributors have spent years.
Thanks, guys. Great charts.
Blood, sweat, and tears learning to be an effective trader and show this stuff. Rick is saying Euro Yen AB equals CD 1905, 1 hour time frame. You have a look on that, Rick? And here's Luca. We do get bond stuff. So Luca's waiting for a rally to sell the bund. He showed this to me last week or 2 weeks ago. Here's his chart on the bund.
The bund hit massive resistance yesterday. I think that a lot of this is what's driving the yen. I think today the bonds turning lower again.
Yeah, he's got a very nice look, Nick. What do you think? So he's looking for a retrace here, right here, 63.48.
Yeah,
so
I'll show you my chart because I have exactly the same chart. You Hardianto again.
Okay.
I have exactly that 50% retrace he's got is also the 38.2 from the September high as well. There's a lot of confluence there.
Okay, beautiful. See how this works?
Yes, Nick, I actually showed that
we end up with
yesterday as well. We have a lot of lows and highs in that area, yeah. You said. So it was an excellent area for a bounce. I mean, for actually a rejection. Yeah.
So there's a confluence from, you know, the traders at FA and
what's really interesting about, you know, a lot of people don't trade the bonds, but one of the reasons I think you should look at them is there are three things that are really tied into moving with bonds at the moment, and that's gold and silver and the yen. The yen is much more correlated with bonds at the moment than the indices. So on the days when people say, oh, you know, the S&P rallied but the yen didn't or whatever, it's often because the correlation actually is broken between bonds and indices, which you could sometimes see. And so if you're trading the yen, you really should keep an eye on the bonds, not indices, I think.
Okay, so Nick, let me ask you this. The bund is a better indicator correlator with the yen than, say, the U.S. Treasuries, like the TLT?
Yeah. No. The bund sometimes, like the bund reversed at a better level this week than the US 10-year. It was a better short setup. And when you look at it, you think you have to, you know, they pretty much all turn together, these bonds. And so you look at the bund and you think, maybe they're all going to go, or it'll break the resistance, one or the other. But it's a good warning sign. It's just like, you know, watching the DAX in the morning, you know, to give you a clue for the S&P later. Sometimes the DAX leads, sometimes it doesn't, you know. That's all. It doesn't hurt to look at any of the 10-year bonds. And I like the bund.
Okay, I'm trying to get the screenshot of the Dow from Tosin. Tosin, another excellent trader. I've witnessed all these guys. So here's the Dow. Looks like you're showing it on the verge of a breakout here, Tosin. You're looking for new highs first over this high. Is that what I'm seeing? And Brian, you may want to try. Yeah, Nick, you made a great long crude call last week. Rick is acknowledging it. So, you know, Rick's a great trader.
I got lucky. Thanks, Rick.
All right. So, Brian, what you may want to do is log out and come back in, because I don't think anyone else is having trouble viewing my screen. Everyone seeing the screen clearly? This is a Dow chart by Tosin. You can't see it either? Alexander doesn't see it? I see it. It's showing up on my audience view. All right. Hi, David. Okay, so here's an example of the community. You guys are part of it. You're not just going to be watching everything that I'm talking about and FA is giving you alerts on. You guys are going to participate. Here's my math. The community plus me plus FA, all the analysts and research on FA, 1 plus 1 plus 1 equals 111. That's my math. Okay? 1 plus 1 plus 1 doesn't equal 3, it equals 111. So we're going to have Nick on in 5 minutes. And I'm real excited, like the whole team is, on the phone app. How many people have iPhones or Droids? Give me a Y if you have phones. And then give me a W if you work. Give me a W if you work. I know a lot of people in here are professional traders. This is how they feed their families. Okay, a lot of people. Yeah, you got to hear Blake's voice and now Nick's voice. So you need this. You need this. Here's the mobile app, and then after this, we're going to have an interview from.
So many technical problems this year, so I just need to hope this works.
Okay, well, hope is good as long as you don't use it in your trading plan.
Let's see if it comes up. Oh. Let's try the other one.
I can see you just fine, Nick.
You're up.
Can you see charts? What can you see?
Yes. We can see your trading view with 6 charts. Yes.
Okay, cool. Okay. So I really don't have any agenda of stuff to talk about.
All right, well, before you start, Nick, can I just ask you one question?
Yes.
All right, I want to just ask you this. I asked Blake before I joined the team, because, you know, there are a lot of great, you know, I did over 700 interviews, and there are a lot of excellent, proficient, consistent traders out there. And I said, well, Blake, how did you choose Nick and Grega and Steve? And his answer was, I just chose the best at what they do. All right, he even included me as a host. So, you know, I blushed for a few minutes. It humbled me. In fact, it's with the greatest pride I'd like to announce how humble I've become. But I'd like to ask you, what was it about Blake's proposal to you to become part of the FA team that attracted you to work with Blake and Steve and Grega and Steve?
Honestly, in the beginning it was just Blake, and I think it's just because I know Blake. You know, I've known Blake for so long, and the opportunity to like grow something from the beginning.
Okay.
Yeah, that's really what
Did you, so you got to know Blake through the Morning Edge show? And
Yeah,
watching
no, way back like 2009, 2010 on Twitter.
Okay.
Really, I think Blake and I were like original Twitter friends. So
Oh, okay.
yeah,
So
that was it.
you had a
Really.
very strong virtual friendship, as my buddy Ricardo.
Yeah,
Gaynor
like,
said.
and you know, way back, it seems like Twitter's enormous now, but way back then, it seems like there was only like 100 of us or something, and yeah, we would share charts all the time. So pretty much what I hope we grow here. So it was good.
Okay. So I'm glad to be working with you. I always enjoyed interviewing you. You know, great crew call you made last week. I know you said you were lucky, but it wasn't luck, because I remember one of our interviews, I think yen was trading 125 and you were very bearish, and that was a big, you know, that was a 2,000 pip move to the downside. So you're a very lucky trader. If you say it's luck,
No, I just
you're a very lucky trader.
I just really look at patterns, you know. I look at patterns, and they either work or they don't. And the more that lines up there, and especially, you know, with sentiment and stuff,
Right.
that's really what I look at. So.
And how did you gravitate towards harmonics, and how long have you been using harmonics as your main tool? Because I've been around a while. I don't want to say how long. But I didn't notice people talking about Gartleys and crabs and sharks and all of these types of harmonic patterns until about 2 or 3 years ago. They became popular.
Yeah, I'm gonna say probably about 2008. You know, I went on really quite an adventure as I learned as a professional trader. You know, once I went, you know, I learned a really good strategy, but once you learn something, it's always like you have to know more, and I was completely fascinated with the market. So I wanted to learn Fibonacci. I read Connie Brown's book, my first book on Fibonacci, and then I read, and then I remember seeing a blog actually about harmonic patterns, and I was like, oh, I have to learn about these. And I got the indicator, you know, that would draw them for you, and it would really annoy me because it didn't quite draw them right, or it used the wrong swing. So I threw that out, and I really draw them all myself now by eye. I don't use anything to search for the patterns for me, and I find they work much better if I do them myself, because I'm really confident in them. So I'm going to say, yeah, about 2008, 2009, and I blogged a bit about them. And I blogged actually originally quite a lot of my adventure in trading, because I started off just trading moving averages and inside bars and stuff like that, and then really progressed. I think that harmonics just gives more weight to the levels that I look at. I still look at all the original things I learned.
So what's this pattern called that gave you the idea that crude was due for at least a retracement move?
Okay, so I was looking for crude to make a seasonal low in February and March, and it's made it quite late this year. And I think the reason it made it late was because of positioning. Everybody was super bullish from the start of the year, and we really couldn't go anywhere until we shook those people out.
Yeah, they said, I believe the COT readings, Nick, before we broke from 55 to sub 50, that a certain group, I think the hedge funds, were more long than they were at 140 crude at the major high many years ago. So it was a record long position that had to be reduced. So that was what was holding the market back, right?
Sorry about that. I just had a quick look. I've got some metals positions on, and I just have to keep looking at what they're doing, because silver's been so scary. So you know, we had this thing and we sold off and made this first leg, and this was an ABC. This was pretty clear, and then it was just really sideways. You get bunching up sideways like this, you know, you move. And when you look at how the market was positioned, it was only going to go lower. So I think, you know, when you look at each of these, like this little rally, I don't know if you can see my mouse here, this was an ABC rally, you know, this here was an ABC. So each one of those, I look at really simple measured move ABCs, and each one of those was a really good sell entry in crude. And then once it breaks and it's on its way, you know, this was a 50% retracement, give or take, in this you know, when we first drew the pattern, it wasn't in this contract, but this was a 50% retracement. When it does that, the minimum that you're looking for is a 1.618 of that rally extension. And in fact, you know, this went down that pattern, which was the 886, which
So there's more left,
which was also, yeah, which was also an ABCD from that opening January high. So for me, everything lines up. It's got, if you bounce off of 50%, you're always looking for either a 1.618 or a 2.618 extension. It was an ABCD, and it was the 886, which makes it a back pattern. So, and they always retrace back patterns, reverse really hard. They're always sharp reversals. So, you know, another thing I noticed about trading crude is, you know, you almost get it always on, it very rarely does a V-bottom, so you almost always get a retest. So we got a really nice retest and bounce in crude. And in crude, very often the second test, you know, will go beyond. It'll take out the previous low and be a false break. Yeah, I was surprised it wasn't. I was expecting that
first. So
exactly.
Yeah.
So yeah, all those things lined up for me, and that's why now this decline that we've seen from the beginning of January, now we're rallying because it's the seasonal trade. How far we rally will be quite important, because I'm not convinced that this first decline is the bottom in and we're going to keep going from here. I wouldn't be surprised if we see a second leg lower that's, you know, likely equal to this first decline or 0.618 of it. So that's what I'm watching for.
Let me ask you this. I think Grega came out with the same alert the same day.
He did one a day earlier than me. Yeah, he did. Yeah.
Did that give you more conviction about your count, or it really didn't matter?
Sometimes,
I mean, it's a different method, but you guys were both seeing the same thing. For me, that kind of builds my conviction.
Yeah, it builds my conviction. Sometimes, though, I definitely do go the other way, and so I'm really, when I was a new trader or hadn't been trading that long, I would find myself very swayed by other people's opinions, and I would have to shut them out and not look, or so I would do my analysis on a weekend and then not let myself read anybody else's, because I wanted to, you know, make my ideas and write my trading ideas down, because I found that I was very influenced.
Yeah.
But now I've become much more
yes.
The pattern's there, then the pattern's there.
I'm still easily influenced. So congratulations.
It is hard, though. It is really hard.
Congratulations on having a bomb shelter mentality and tuning everyone.
Trust me, it wasn't always like that.
Yeah. So really, the next trade probably that's setting up is going to be a short.
Yeah, you know,
just don't know where yet.
Yeah, from an ABC move like this, you know, crude really likes two fibs, the 38.2, which we've just blown through, and the 78.6. So I would say, and I'll show you it here, the next one for sure is going to be this 78.6, which is at 55. I think that's where I go, and there's all these other previous highs here. So yeah, this it'll stop at 52.63, which is the retest of the 236. That would be very bearish if we stop there. And otherwise, I think we see 55.26. So those would be my two levels.
Nick, if I may, if we zoom out, in the current area we're testing, though, we do have the June 2016 and the October 2016 highs. So in my book, there is a slight chance that we might.
Let me look at the continuous chart. Hold on.
Yeah, I'm looking at the CFD for that exact reason, you know, to have a continuous.
Yeah. So we're gonna.
Interesting. And there's a gap back there.
Yeah, so we could, you know, the gaps are there, just the contract rollovers rather than other kind of gaps, so they're not quite so meaningful. But yeah, like you know, it's a range trade. Part of why this year has been so hard so far. You know, everyone's been looking for great trends, and they've been great range trades. So
What's the
that's why
best
it's so
trend?
difficult.
What's the best trender that you're looking at nowadays?
I'm really hoping that this is the start. I know a lot of people. I'm really hoping this is the start of a big leg lower in gold and silver.
I saw that you were, I think it was on Skype, that you had some type of, it may have been a Gartley that could take silver all the way down to 1620. Is that correct?
So I'm just, yeah, because, yeah, I do, yeah, because, sorry, I've got gold up, I'll put silver up. So, sorry, just a bit slow. I'll clean this up. So for me, you know, this rally from the start of 2016 was a corrective ABC rally. I know Gregor counts it as impulsive, and it's just, you know, I'm not the Elliott wave expert, and he's quite likely right. But for now, I see this as just a simple corrective ABC, and I think that we've just done a repeat of that on a smaller scale. So if we come down on the daily, for me, where it's very tight, we've just made another ABC, so I am looking for a leg lower. And what I've been looking at here is the 886 of this first decline, which, you know, in a harmonic patterns, the retracement, you know, we get an impulse leg, and the retracement very often is an 886. So as long as we don't take out this previous high, and if we reverse lower from here, I think we could see another leg lower that takes out this leg, this early March low. So that's what I'm looking at in silver and in gold. So
okay, thank you very much.
Just, yeah.
So
And, yeah, I know everybody else is.
Would you correlate that? Do you think it's going to take a strong dollar for that to happen, or it doesn't matter?
I think it's absolutely the strong dollar is what we need to make it happen. And I think if I'm wrong about the dollar, then this won't work. So okay. Yeah, no, it's all about the dollar.
Okay.
So the dollar and bonds, really, metals have been very correlated with bonds. So we could look at the dollar index if you like.
Bonds go up because of economic weakness or deflationary trends. Rates come down, and gold's going up, and the metals are going up with that because opportunity costs of holding metals is lower.
Right.
And, or is it a deflation hedge? The gold as well. Everyone thinks of it as an inflation hedge. Maybe it's just in the 30s it was a pretty good deflation hedge too.
Yeah, I think those days are over, but yeah, no, for me they're just that's just how it works. You know, you don't earn any you certainly don't earn anything holding gold. But right. It in all other respects for me it just trades like a currency. So,
yeah. And especially when we had negative rates in Europe, it was really moving because it costs you money to stay in cash. You may as well own a little gold instead of paying the bank to hold your money. Okay, so we're looking at the Dixie here.
This is the Dixie, yeah. From, you know, bull, this is the big 618, and for me bull runs very often end on a butterfly pattern, so it is perfectly reasonable to think that the Dixie has made a high in January and that's it. But this price action, this chop, for me, the price action since the start of January has all been corrective, and that says to me that we haven't made a high. We are going to make a new high above January's high, and that's it. You know, whether you're able to count waves or not, or no Fibonacci or not. You know, on any chart, when you see waves that don't overlap the previous wave, you can say that's impulsive. And when you see choppy waves that overlap the previous one and go back into the previous range, then you can say it's corrective, whether you know anything else. And that's, I think, what we're seeing in the dollar.
Okay, so you could just trade the Dixie because of this count, or do you use the Dixie as a guide and then make your preferred long or short the dollar?
No, I look at it. I'm looking at it just because it's a really good example, but it's so correlated with the euro, and the euro is the big beast. Now, for me, you see, most people look at this. They look at the decline in the dollar from the 2001, and they say we're at the 618. We should come all the way back to the 382. So from this decline from 2001 to 2008, we've hit the 618. We should therefore normally retrace to the 382 and then return to the 50 and then rally. That's what most people looking at that would say. But what I noticed in the Dixie, now on this chart it doesn't go much beyond it, but that actually, what we're looking at here, this high in 1985, that was the high, and that this decline from 85 to 92 is exactly equal to this decline from 2001 to 2008. And if you go and look at historic charts, you'll see that what we've actually made is a perfect ABC decline. And so I'm looking for one more leg higher, and actually I'm looking for closer to 107. So if I put fibs on this, this is what I'm looking at for. Hold on, just.
So that rally in 2001 was 78.6, and this could be 78.6.
I'm actually, what I'm actually looking for, hold on, just make it.
We're getting it, Jess.
So yeah, what I'm looking at is 618 because we've gone through the 50. And why I like it, look, if I make this bright red, so you can see what I mean, you can see how every other fib level has been really well respected. So this is the 23.6, the 38.2 was support. So that big range that we got stuck in the dollar was the 38.2 and the 50 of that bigger fib swing that I've just shown you. Right. So for me, it's quite reasonable that we'll continue higher to the next one, which takes us to 107. 107.
Nick, do you expect that to be some kind of a terminal push higher, or it's too early to call it?
Yeah, no, that would be a Gartley. Yeah, but no, I think that we'll continue to a back pattern. Because that's where the 2.618 of this first swing is. That's the one I look at, and that's at 117. So yeah, I think that 106. I think that 106s will be resistance, but it'll be resistance on our way to 117, which is where the big pattern is, and then bigger pattern is. Sorry.
Okay, great. Look, I have a question. You covered silver. Someone was asking about gold, Nick, if you don't mind.
Oh yeah, no.
It was Fazal.
Yeah, hold on. Oh, I've made a mistake. Hold on. Let's close that. Bye. So let's go to the weekly on gold, and I'll show you how I counted gold, the same as silver. So for me, in gold, we're in a declining wedge, and we've got one more leg lower to come. So I'm going to go up to the monthly, show you where that comes from.
So A, B, C, D takes it to 1164. Your monthly is still under 1,000.
So now you look at it and say, have I drawn these fibs right? And for me, when I draw a fib on, the first retracement I'm looking at is a 236. Now, if you see a reaction from that, either the first time you touch it, or if you go through it and then you back test it and it reacts off it, then you can say, I've drawn this correctly. So we have really good reactions on the 236. So we know that this big swing from the 99 low is all good. 38.2 fibs are always messy, and so are 618s. But 50s are usually pretty crisp, and we had nice reactions off the 50. I think that we're going to keep going lower to the 61.8, which is down here at 889. So that fits with a stronger dollar view. But if I go down to my weekly chart, this is how I counted it in line with the silver.
You know what that number
so
represents to me?
C, and then this here was 618 of this first rally. So C equals 618 of A. That's very common, corrective pattern, and that's what I believe that we saw in this rally from the December 2015 low in gold.
Okay.
Sorry, what number?
It's interesting. Your low on your telescopic view of 888, 889.
Yeah.
That was a high in 1979, 1980. And then
my chart doesn't go that back far. How annoying.
Yeah, that was it. And then we had a 20-year bear
that makes
market.
makes me feel even better about that level.
Yeah,
That's
I mean, that was the end. That's when we went into, the Russians went into Afghanistan, and during the Hunt silver squeeze. So I always thought that would be a natural place for this bull market to come back and check, would be the previous high of a major cycle.
Okay, so I need to go and find that now. Now when we hang up. Okay. So I see this as a alternate ABC where the second leg is 618 of the first leg, and then we've had, so we're still in a corrective. So for me, an equality move would have gone a bit higher, but what we've done is stalled at the 618. So this is like the golden ratio zone, between the 618 and the 38.2, and they're both very messy levels. So we extend beyond both, and so from here, stalling there again, double top, I think we'll at least come back to the pivot level in the middle, which is 1227. If we're going to go higher, that will hold. That's also the trend line from the December low. If we're going to go higher, then 1227 will hold and we'll rally for another leg higher from there. But
would that change your big picture? What would change your big picture? Closing over 1300? Where you could take that sub 1000 target off the table?
Closing over 1285 would say to me that the rally from the December low to the July last summer high was just the first leg of a two-leg correction, and then we would see another leg higher. So yeah,
like
if we close above
14,
that trend line, so if we close above 1285, then I think that this leg here was just the first leg, and we're going to see another leg higher. Yes,
right.
But that's my bull bear line.
Equality is about 1400, and if it's a fib extension, it's going to be like 15 or so. I have one. Can we wrap it with one quick look at cable?
Yes, we can.
I have a request to look at cable.
I like requests much better. I'd much rather talk about things people are interested in. So, cable, such a hard trade, isn't it? Okay, this is really messy, but I see I'm going to go down because I've drawn patterns on here and I don't want to delete them. The price action since the crash low in cable again has been choppy, overlapping, sideways and corrective, but I really do think that cable has a good chance at an ABC pattern, and I'm going to take out some of these old patterns so you can see it better.
So that would take it to the weekly, monthly breakdown under.
I really do think, that cable goes to 128.
Okay.
And how do we get there? I think that I have two levels. We're going to come back down to 123.18, or we'll come all the way down to the bottom of the wedge down here, and then we'll see one more leg higher before lower in cable. I do think cable, it's going to be one of those occasions for me where cable doesn't go the same way as the euro, and so the euro might move the dollar index, and so what you might see is cable actually going the other way to all of the majors, but that's very often what happens.
So that would be very ultra bearish for a continuation move in euro pound to the downside.
Yeah. Yes.
Okay.
But in euro pound, I'll show you that next. I think we've got another leg lower at least setting up there. So, okay, not having much luck deleting stuff. Crude oil inventories, should I stop talking for that? Does everybody? For me though, I have to say that then, this is a 78.6 fib, okay, on the monthly 128. When you break a 78.6, very often you won't. It's very strong resistance and it's like a hard line. We won't poke above it. So I think if we fail there, then we're going to continue to 1.17, which would be a back pattern, and then we'll rally from there. And that would match the back pattern that we see in the dollar index as well. So this is my view of cable. I think that we have a really good chance of rallying back to 128. Really good structure there as well when you look at it. ABC, everything lines up there, and then we'll see a decline to 1.17.
Well, okay.
So that's
Thank you.
Nice. That's my view of cable. I'll just quickly.
That's your Nostra Nicola.
Let me see what's on here. Oh no, it's not. I haven't got my chart up for things, so I'll just pull up my chart for euro sterling from here, from the site, if I can find it.
There it is.
Yeah, so this I haven't actually. Let's go back to the. Yeah, so the 4 hour, I think that we're going to continue lower to 84.46. This is where we failed, and then this wedge that we're in, this is my 4 hour chart, will break lower. I haven't got it on here. If I'm going to show you that bigger view, hold on. If everybody. It's not being kind to me today, sorry. Computer says no. Hold on.
By the way, 84.40 is also the neckline of the head and shoulders for euro pound. So that's a very strong level.
This time of year, you know, I don't think that the crude oil inventories matter quite as much as the crack spread, but okay, so here we go. So yeah, this is the 84.40 level that I think that we're going to continue lower to, and if I go to a daily, for me this decline here, the decline from the October high is just the first leg, and that we'll see a second leg, ideally down to the 38.2 and down to probably somewhere around 78. Depends if we break higher from this wedge and make an AB, then I think we'll only come to the 50. But if we break lower without going higher, then I think we'll go lower to about 78.50. So those would be my two options. We either do that and then, oops, and then lower to there. But if we break lower without going higher, then we'll go straight to here. So one of those twos to make an equal leg with that first decline that we've seen. That's my view of the euro pound, and then it's a buy again.
Thank you so much, Nick, and I look forward.
Very welcome.
You know,
Thank you very much,
great.
Nicola.
Yeah, great to be able to have you.
No, I don't mind.
Call on you at any time. You're like, you know, my.
I don't mind coming in. You know, if you've got nobody else and I've got half an hour and you've got half an hour, I don't mind coming in and showing my.
Okay. Well, I love your analysis. I've always been a fan, and glad that I have access to seeing your alerts, being a subscriber. So
Excellent. Thanks.
thank you so much, Nick. Have a great afternoon, everyone. Thank you very much. Let's see, Tom Starling loves you. He wants an 8x10 glossy picture autographed. Let's see. Anyway.
No, I've got a face for radio.
So let me ask the crowd here, what did you think of today's content? Do you think that we provided a lot of great ideas and charts, and from me to Blake to Steve to Nick? So
I didn't
Go
get
ahead.
a chance, by the way, to talk about the indexes, but I have to say that I'm a huge Peter Ghosteen fan, and I know exactly who he is. And
Okay.
I completely agree with his take on the stock indexes yesterday.
All right, so
if
you
anybody
think,
missed it.
so then you're labeling it from the flash crash low to read to whatever high we finally make, and then S&Ps pull back to about 1800. You're in that camp?
Yeah, but we know when. Yeah, exactly. I don't think that we'll come back to the 50% though, like he does. I think
Okay.
probably only the 38.2. But yeah, in
That would
every
be
other
what,
way,
about
I agree with him.
1950?
Yeah, hold on. I'll get it up for you while
I
you
think
chat.
it's about that. Because I know a
Yeah,
lot of
exactly.
people. So that would take away all the gains from the election, because the low on election eve in the overnight market was 2030 when it was down the limit. So
Right.
that would take it all away. Okay.
Yeah.
Okay. Thank you so much, Nick, again.
Very
And
welcome.
I'm really enjoying working with each and every one of you here at FA. And
Okay.
do you like the acronym
We love having
FACE?
you. We love having the webinars. We really didn't have. Yeah, I think it's a great
Yeah,
addition.
we get to express ourselves and hang out with people. All
I think
right.
it's really a good way for people to ask questions as well and discuss
Yeah.
stuff. So great.
Okay.
Bye, everyone.
Greg
Thanks for
enjoyed he
listening.
said, a great interview, Dale. Really good. Thank you. So remember, everyone, don't just count your pips, count your blessings. I feel being part of the ForexAnalytix team is a blessing for me. And being able to pick brains of great traders, including you in the community, is an edge. So it's a real edge to be part of FACE. And my FACE is going to shut down now and go out and walk Rusty and get my face in the sun here in Southern California. Look out for alerts coming your way. Check out the phone app. Go ahead and at least get a phone app today. And we'll see everyone tomorrow. Thank you, everyone.